Guys, this is an update on our silver miners play that I highlighted a couple of weeks back. If you have been watching the market, we had a pullback, a substantial pullback, as a matter of fact, across pretty much every sector you can think of. And that ranges from equities to bonds to cryptos, even precious metals. Silver miners, of course, being no exception. We had this purple primary pattern in our SIL or SIL ETF, which is now invalidated. Our invalidation line was the red line that sits at 34.18, as you see pictured in front of us on our long-term chart. I was expecting a healthy pullback into this box. And when we take a closer look at SIL, it looked like we had a pretty healthy pullback where we had an A and a B and a C. But then as we start to hit our counter rally, we broke right down through support. SILJ followed a similar pattern in which we completely broke down below our support. In the case of SILJ, 1140 was the support at the bottom. So our junior silver miners ETF followed the same situation, same kind of pattern. And as a result of that, our purple primary pattern here is also invalidated. With that being said, we also had our silver metal itself. So this is just the silver price per ounce. You see the same situation here. This is the daily chart. We hit another lower low. And when we take a closer look at silver, which I'm going to bring up right here, we've actually had a bit of a bounce since that lower low that we hit. So right now we are bouncing. We're seeing a bounce like this in all three of these assets. So of course, silver is the base underlying commodity that the silver miners will follow. And you can see in SILJ, we have a bit of a bounce, as with SILJ. At the same time, the metals complex as a whole tends to move together. So while we're focusing primarily on silver, gold has its own action going on, and it actually looks more bullish than silver does at the moment. So this is just gold futures right here. We didn't pull back as hard in gold. And when we look at GDX, which is our VanEck Gold Miners ETF, you'll see that we did pull back pretty hard, and we didn't quite get the lower low. You could call this a double bottom. If we take a closer look, the picture's the same. You can see a bit more clearly. GDXJ follows the same situation. This is the junior gold miners ETF. And here it's a bit more clear. We didn't get a lower low. So this 1-2 is still intact technically by a thread. Now, when we take a closer look at these, you're going to see the bounce happening. Now, you may be asking why we care about gold. As I hinted a little earlier, gold and silver are part of the metals complex. They move together. In addition, there is an interesting relationship between gold and silver. Typically, gold moves first. It gives you advance warning. Silver generally lags behind, but then silver will catch up with a much more violent rally later. Following the miners themselves, the miners exaggerate these movements. So your gold miners are more extreme, but they sometimes lag behind gold, while silver miners do the same thing, with silver being their leading indicator. And of course, the most volatile thing here, the thing that'll lag the most, would be the silver miners. They should, in theory, move latest, but these are just generalizations and Elliott wave theory. We take what is. We don't necessarily expect history to repeat. So take all that with a grain of salt. Now, when we look at the close-up pictures for GDX, which is again the gold VanEck miners ETF, we have what looks like a 5 up here. I'm showing the gold miners here in this case because the picture is a bit more clear, a bit more liquidity, a bit more volume. The charts are more clear. You have a 1, 2, 3, 4, 5, and looks like we may or may not be done with our second wave pullback. I would not be surprised if we went up a little bit higher for a B wave bounce and then finished a little lower. You can see we didn't quite hit the 61.8% retrace in GDX. GDXJ, similar story. Here we actually did hit our 61.8% retrace. Now, the reason I bring that up is because when we look at SIL and SILJ, again, it's a little fuzzier. You can't see it as much as clearly. We had a much more shallow retrace. So this was a little bit closer to, what is that? Maybe just about the 30% retrace. We're bouncing now. Maybe done, maybe not. Would not be surprised to see a healthy C wave to finish this wave 2 pullback. SILJ is the same story. You can see a bit more clearly. We made it down to about, what is that? About the 30% retrace level there. I got this thing drawn down to the 61.8 retrace, 61.8% retrace. Now there's a chance that since GDX and GDXJ have already pulled back that far, maybe they'll start their third wave rally while we see a bit more of a lower low or a B wave bounce in the silver miners. they might be a step or two behind the gold miners. It's not clear yet, but again, there's reason to be excited because gold is looking promising. GDXJ look good. And as I mentioned, SIL and SILJ both seem to have 5 ups at the micro level. These are projecting to, let me see here, SIL is looking at, if this does hold, if we get our 38% retrace here, look for something in the $40, $41 range. That could be our larger wave one. SILJ, we might have it go up to anywhere from the 14 to 1437 mark. When we look at the big picture, those would be pretty substantial wave one rallies within the big picture. So on SIL, our big picture targets remain more or less the same. I will note that these purple numbers are no longer valid because our 1-2 has invalidated. So these will be removed during the next update. So our upper targets look the same. If we hit about $40 here, we'd end up in this region, at which point we should see a pullback, and that would be your chance to get in hardcore leveraged. If you do plan to get in leveraged in the nearer term, of course, use stops. A good place to put a stop would be the low that we hit on December 15th, which falls right at about 1112 for SILJ, and for SIL, that lower low that we hit falls right around the 33.31 mark. So I'm not going to take a position myself just yet. If you are loading up unleveraged, maybe a good time. It's up to your strategy. And I will emphasize again, I will not be buying options just yet. I'm going to wait for this to develop. Metals are very deceptive. We saw how we had a beautiful 1-2 setup in both of these ETFs, and it failed, even with a perfect 5 up. So don't get caught. If you must go long with call options, set a tight stop. And of course, I haven't been presenting frequently on the silver miners, but as the activity starts to dial up, I'm going to be doing these a lot more frequently. So subscribe so you'll get my updates as this rally materializes. And if you've enjoyed my video, don't forget to like. Until next time, thank you for watching and happy trading.